If you know what are the key indicators to look out for, and if those things happen, you know then the price will drop. Right, prices keep going up, right? When will it drop? We have all the scary news in the market, rising interest rates, recessions, the tech firms and all the big firms sort of holding back on hiring and whatnot. So with all of this, right, and the property prices going up at the rate that it has been going up, it should drop, right? It can't continue to go up forever. That's the question that people are asking. So I've been thinking real hard about how to really give you guys a clever answer to this, and a data, right, you know us, right? A data back, a solid answer lah. So we are not God, no, none of us are, and so which is why there is a different, I can still answer this question. So that's it. I'm going to give you guys the answer today, but not in a way that you expect it to be. Okay, why do I say that? It's because I can't exactly tell you like a when can be, the answer to when can be, you know, the answer can be 6 months time, 12 months time, but that's very silly because we don't know. But another way to answer when is in what circumstances, or if something happens, then it will trigger the drop in price. I think that's a better way to answer it, right? And a deeper way to answer that question. So if you know what are the key indicators to look out for, and if those things happen, you know then the price will drop. I think that is even more powerful than simply tell you, oh, maybe within the next 1 year, price will drop. Yeah. So I'm going to share with you guys and give you guys the answer. When will prices drop? Okay. And part 2, more importantly also, the next follow-up question, drop by how much? Okay, because then it will sort of make it worthwhile for you to then consider, hey, is it worth waiting for that situation, that scenario to happen? Okay, and then point number 3, what does it mean for you, and what can you do? What should you do? What should you look at? Okay. So first of all, right, understanding price drop. Okay. So price drops, I have sort of split them up into two very easy to understand categories. Simply short-term and long-term. Okay? Of course, short-term price drops, we all know that's bound to happen. Okay? But I don't think that's the fundamental fear of a lot of people in the market. Right, there will definitely still be people that try to time the market. Of course, if you're holding multiple properties, you're picking your investments, you have the luxury to time. But if you are looking for somewhere for own stay, you are looking to upgrade, right, you probably don't have that luxury to sort of wait. You also don't know exactly what you're waiting for. But your big concern comes if will prices drop and then stay low for the foreseeable future. And how do we look at that? Short-term price decreases are led by demand pause, right? When demand is paused. So later I will share with you in what circumstance the demand is paused, and in what circumstance demand is eliminated from the market. If certain segments of demand is eliminated from the market, then yes, prices will drop, and then they will remain low for quite a while, right? And later on, I'm going to share with you some of the case studies that have happened in the past, and that will, I think, give you a much clearer idea of how actually the Singapore property market works, what really drives the Singapore property market, what are some of the key indicators affecting the Singapore property market. I wouldn't touch so much about the supply side factors today, right? Primarily the demand side factors, because supply side factors are more transitory. For example, if a large surge in demand comes online, first thing is, yes, prices may drop because it then becomes a buyer's market. People have a lot of options to choose from. You don't have the sort of pricing power to keep pushing prices up like that. But would that cause prices to drop in the long term, right? No, because first and foremost, the fundamental psychology of the market is everybody wants to make money. Everybody wants to sell higher than the previous neighbor. The developers want to sell high because they have to make money. Your own home, your only 1 or 2 property, you want to sell high. And we have seen with all the other data that we have always been showing you, that the Singapore property market sits on strong fundamentals. So supply side issues, if a large surge of supply comes onto the market, that may cause prices to halt for a short period of time, stop going up for a short period of time, maybe even drop for a short period of time, but it will not cause long-term price drops, right? So the main thing we want to look at is, in what circumstances will there lead to demand elimination from the market? Okay, so we can take a look at this chart. I think it shows us very nice. I will use 2 charts, right? This chart and also the next chart that sort of shows you and tells you what were the cooling measures that were put in place in the Singapore property market all the way back to the 1990s. Okay, so I bring your attention to this part. Okay, the periods where the market went on a prolonged price decrease, okay? Prolonged price decrease. You focus in on after 1997, after the Asian financial crisis, we went through 10 quarters of price drop. And also, after 2013, the institution of cooling measures, we went on 15 quarters of price drop. Okay? So I think this chart shows it pretty well, because on the top line they show what were the cooling measures that were put in place. Right? We have how do I? Okay. Pardon me. Apple is not my strength. Okay, but you see over here. On the top line, they tell you what were the measures and then what did that result in, okay? And then at the bottom line, it shows you global events at the bottom part. So which one really impacts prices in the Singapore property market the most, right? I choose to believe that the cooling measures impact prices more so than external events, okay? Because external events may lead to demand pauses, because external events create uncertainty in the market and then demand may pause. And then so, you know, when demand pause, volumes drop, sometimes people don't buy and whatnot. Okay? Next up, right, we also have this 15 quarters of price drop. So ever since the institution of anti-speculation, so actually cooling measures are not new to the market. We have had cooling measures ever since 1996, and I will total up all of that, 25 quarters of price drops after the institution of the anti-speculation measures coupled with the Asian financial crisis. What kind of cooling measures? I think that is also quite interesting. A lot of us today always say Singapore property market no capital gains tax, but I think for the more 老教 people, right, they actually do remember that Singapore used to have capital gains tax, right? Let's jump over there to take a look. It's more interesting that way. Do I double click to go back to the normal size? Jump to the next page. Yeah, okay. Take a look at this. Before 1996, the Singapore property market was flooded with speculative demand. Huge speculation, prices were skyrocketing up very quickly. You know, that was the time whereby you could queue to buy a property, after that walk to the back of the queue and sell it for a higher price, right? So with all that increase, thankfully the government instituted anti-speculation cooling measures in 1996, because we all know what happened in 1997. Had they not done that, imagine if prices really were at the peak at 1997 and we had to go through the Asian financial crisis. When prices were at the peak, a lot of people would have suffered a lot more, because we all know of people that have suffered very badly in the Asian financial crisis. I think it would have impacted the market even more had the government not instituted all of this, right? LTV at that point in time was reduced to 80%. We had capital gains tax, right? But only if you sell your house in 3 years. Okay, of course, today we have an evolution of that capital gains tax, but at that point in time, it's 100%, 67% and 33%. Basically, if you sell it within the first year, all your profit must go to the government. Sell in second year, 2/3 of your profit, third year, 1/3 of your profit. So today's SSD actually is nothing really compared to last time. But of course, right, the kind of profits people used to make is, and because the house contents were a lot smaller, they could really like double their profits from there. Then before that, also no buyer stamp duty and also no seller's stamp duty. So the market was hit all of a sudden with quite a strong set of cooling measures at that point in time, and that sucked the demand. It sucked the speculative demand out of the market. It eliminated the speculative demand out of the market, right? And hence caused prices to drop like it did all the way down, right? So actually this drop was not because of the global financial crisis, of course, the Asia financial crisis, sorry. It was caused more so by the elimination of the demand from the market, right? Of course, it plunged even more after that, and then that's where we saw the government actually didn't really do much after that in terms of reversing the cooling measure, but then they kena another .com crash at 9/11. So after which they took out the capital gains tax, right? Capital gains tax were lifted. Okay, foreigners were allowed to take up Singapore dollar mortgages, and this one, buyers can use CPF to pay 10% of down payment from 0%. Last time, you cannot even use your CPF to buy property, right? So we all like sort of forgot, especially for those in our 30s and whatnot, but you know, those in the 40s and the 50s, you will remember all these things associated with the market. And last time the prices still went up so much when people couldn't use CPF, right? Stamp duty rates were lowered by 30%. LTV was adjusted back up from 80 to 90%. Okay, so you see what the government did when prices were low for long periods of time. They chose to reverse back on their measures, but when they did that, it resulted in quite a fair bit of speculative demand coming back into the market, which then brings us back to what happened over here after the global financial crisis of 08-09, where a lot of liquidity came into the market, allowing a lot of people to start speculating in the market again. That caused the prices to shoot up like that. And then what happened? Okay, after which you come back to this one. So you see, in the 25 quarters of decrease from 1996 all the way until 2003, the government chose to reverse away some of the anti-speculative measures, allowing for more demand to come back into the market. And I didn't put in the supply side things, but at that point in time, the market was also sitting on a lot of supply. The developers can en-bloc the land and they can hoard the land and whatnot. So there was a lot of supply in the market as well. So you see, after which in 2013, okay, that was where they instituted TDSR and all the other cooling measures, again stripping and eliminating the speculative demand from the market, because that's where we went from 90% LTV back down to 80% and today at 75%. That's where we first saw ABSD. Right, last time you could buy 2, 3, 4 properties, no extra tax. All you need to do is pay stamp duty. And the nail in the coffin was the total debt servicing ratio, as you can see from here. After June 2013, that was the nail in the coffin that resulted in the 15 quarters of price decrease. Okay, if you follow our live last week, we also drew another indicator to share with you why the prices were so anemic in that period of time. Another key indicator on the HDB side of things, right? Maybe we can put that link into the description as well for you to go over to take a look. The recessions one. Okay, so right. Also, in conclusion, what am I trying to say? The property prices in Singapore, you know, they may drop if demand is paused, right, due to external factors, due to maybe another round of cooling measures, impacts on the market, uncertainty and whatnot. But for prices to drop and remain low in the long term, right? Because I mean, personally for me, do I care if the prices were to drop in the next 1 to 2 quarters? No. But will I be scared if, let's say, I don't know, will prices come up or remain low for the foreseeable future, and that will start to concern me. So for those of you listening, you may want to then just put that into your head and segment out the different the different fears and to make sure our fears are well reasoned, so that you can then go out and pick up some of the important data points to then allay those fears. Okay? I'm going on and on, but let me just move on to the next important thing, right? So when will prices drop? I'm going to give you the answer split up between HDB and private. Okay, so after the 2013 cooling measures, yes, we see the TDSR written there, but the one that really hit the HDB prices the most is mortgage servicing ratio. Last time, you want to buy private or you want to buy HDB, the loan evaluation is the same. After 2013, you want to buy HDB or brand new EC, they only allow you to use 30% of your monthly income as part of the calculation for your loan eligibility, whereas private at that point in time was 60%, today is at 55% of your monthly combined household income to service debt, which essentially means the HDB financing is half of the private market. And so over here, if they make it even stricter, okay, that will start to remove demand from the HDB segment because people will be like, hey, it's going to be so much easier for me to take a loan to buy a private property, which is something that they are seeing in the EC market right now, because it's actually easier for you to buy a private property, be it resale, be it new, than buy a brand new EC because of mortgage servicing ratio and because of eligibility criteria, okay? Which is then my first point, okay? I sort of jumped the gun to the second point, but on the first point, changes in eligibility criteria, if you look back, that was also one of the reasons that resulted in prices dropping for the HDB after 2013, and it only really staged a mini resurgence in the last 1 to 2 years because of what is happening in the world right now, in the absence of which I do not, or I would not have expected HDB prices to pick up in the last 1 or 2 years. Why? Eligibility criteria. Last time, before 2013, or between the multiple rounds of cooling measures to try to hold the market back between 2011 to 2013, PRs, when they got their PR, right, they could buy a HDB immediately. Coupled with the financing rules, it will be the same to buy either if you buy a HDB or private. So a lot of them in the end chose to buy HDBs because it's the more affordable option. The loan is the same. But today, PRs, after getting their PR, they have to continue renting for 3 years because they have a 3-year cool-off period before they are then eligible to buy resale HDBs. Okay, so put yourself in the position of a PR couple, have been renting for easily 10 years, okay? And now you finally got your PR, but you then still have to continue renting for 3 years. And very simply, let's say you pay $2,500 a month in rental, then you times another 3 years, there's going to be 90,000 more further expense before you can then go in to buy a HDB at, let's say, a $500,000 budget. But if you were to decide to go for private, right, you can buy it immediately, number one, right? Utilize the potential expense, that $90,000 to down pay the private property and start paying off on your own loan, start paying down on your own asset instead of paying somebody else's asset at a $1 million budget, because remember, MSR, TDSR, it's half of that, right, which have driven a lot of the demand and eliminated a lot of the demand from the HDB resale market to the private market, resulting in the long-term decrease in the prices. Okay, now you start to see the picture over there. Okay, and what else will cause the HDB prices to come down? because of what has happened in the world in the last couple of years, I can't say the word because if I say the word right, YouTube will block my video. But we all know what happened in the year, the P word and the C, the P word and the C word. Okay, if BTO wait times were to come back to normal, because currently it's like 5, 6, 7 years, right? And a lot of young couples just don't want to wait so long. And hence they have moved into the HDB resale market. But if the wait times were to then shorten back to the 3 to 4 years, for example, I see the demand being again transferred over to the BTO market, because everybody knows when you buy a BTO, it's subsidized, and there's a pretty good chance you're going to be making money out of the BTO as opposed to the resale market. So for those of you listening or watching the video, please do not see what has happened in the HDB market in the last 1 or 2 years and sort of assume that that is going to be the trend in the future. I do not honestly think so, because of all these demand supply factors last time, moving forward, everything considered. Okay, so when will HDB prices start to drop back down again? When BTO wait times are reduced back, sucking away the demand of first-timers back into the BTO market and out of the resale market. Another reason that HDB demand will be eliminated is if, of course, the government starts to sell them at a shorter lease period, which is possible because the fact is that the land prices will always have to go up. Okay, but yet again, if it keeps going up, but they want to restrict and they don't want people to over leverage on themselves, right, to buy the particular property, one of the options, and we have seen this across the world, which is to sell the properties at a shorter lease to try and keep the prices low, okay, or affordable lah. Right, either that or longer MOP, and we have already seen that happen in the prime location housing, and we have the eligibility criteria when you subsequently sell that property in the future as well. So all these are draconian rules designed to hold back HDB prices. And if you have even the slightest bit of wanting to have your property act as sort of an appreciating asset for yourself, if the rules become overly draconian, you will then decide to say, hey, you know what, maybe I'll just go private instead. And that again will eliminate demand from the HDB market, causing prices to remain low for the long term, right? It has already more or less been eliminated, right, or pushed into the private market because of all the MSR and eligibility criteria over in 2013. The demand is artificially increased in the last 1 or 2 years, causing the prices to come up. And after the BTO wait times drop back down, I see the trend reversing back to the decreasing trend from 1.3 to 1.9. Alright, next up, the private residential market. Maybe more applicable. I think a lot of our viewers are in the private market, or at least looking to upgrade into the private market. So, key question, what will cause private residential prices to drop and remain low in the long term? Right? How or what might potentially eliminate demand from the market? Number one, which is also obviously a extension on the last point on the previous slide. If BTO upgrading regulations change, okay, for example, right, the government wants to make it a lot more tedious for you to upgrade from a HDB, right? But then again, you know, the government needs HDB resale flats in the market to sort of cater to the not so high earning PRs and of course couples that do not want to wait for their BTO. So they sort of need to ensure that there's still a good supply of HDB resale flats into the market. So the chances of point 1 happening, I believe, is very, very low. Another reason why the chance of that happening is very, very low, I think this is probably their last ditch effort I honestly wouldn't rule them out because I really see the private supply being very, very low for at least the next couple of years. And if the government doesn't, catch that well and release sufficient supply into the market, that may cause a huge sudden spike in property prices, because we have a good number of BTOs in the next couple of years. And if you continue watching the video, I'm going to give you where those BTOs, how many of those BTOs, and where are they located at later on in the video, okay? That one very important if you want to pick out locations with that may potentially have a lot of upgraders looking to buy in the future. So yeah, chances of that happening, I don't think very, very high, but if it does, it's definitely going to impact prices, because it then eliminates perhaps the single biggest chunk of buyers in the private residential market. Next up, of course, if the institutional capital gains tax start to come into play, right, that will eliminate the investment demand into the private residential market, right? So third one, sort of the same thing. If the government say no more decoupling, they have stopped decoupling over in HDB. If prices again keep shooting up, they may then start to close off loopholes. We have seen them close off the trust loophole, or at least not really close off, make it harder. If they do something with decoupling, that of course will also eliminate demand from the market, because people may then just go, you know what, we just buy that one in Singapore already. So difficult to buy a second one. They may then just move the funds overseas. But in the eyes of the government, do they actually want that to happen? Probably no. They ideally want the citizens to keep their money in Singapore and have a vested interest in Singapore, as opposed to have a huge chunk of your money overseas and then the overseas government earn all our stamp duties, whatnot, right? I think they prefer that they keep the money in Singapore, obviously not then compromising or causing prices to go up too much, right? So all in all, why do I say I don't think prices will go into a period of extended decrease is because I don't see the chances of these three things happening at least in the foreseeable future, okay? Because there's a lot of other things the government can do to hold back prices. For example, right, like just now what we mentioned, adjust TDSR. So why, you might say, hey Elvin, why you say these three things will affect or cause prices to drop over the long term, but if they adjust TDSR, or even if they adjust LTV, it won't cause prices to go and to drop for a long period of time? It's because the market already is aware of those measures, TDSR, LTV. Changing that will pause demand. Okay, so people will say, okay, then now maybe I take a step back, sort of do my sums, see where things go. But if there's a fundamental need, they will then still come back into the market, right? Because at the end of the day, the owner-occupied demand will always still be there. It's more of maybe the investment demand. So if the investment demand is stripped out, eliminated from the market, that's where prices may remain low for a sustainable long-term future. And changing LTV and changing TDSR won't really eliminate investment demand. Basically, that's how I would answer that question. Okay, so maybe put your thoughts into the comments. Let me know if you have any questions. This is quite deep, but I feel this is a better answer to the questions of like, hey, when will prices drop and whatnot. Okay, next up, right, we will move to drop by how much. Okay, so for this, I refer to my favorite report, the MAS Financial Stability Report, chart 3.7. Again, once speculative demand has been eliminated from the market, the government has managed to sort of narrow the price flux of the property price index to within this plus minus 5% quarter-on-quarter difference, right? It used to be quarter-on-quarter up 5%, down, or maybe 1 year up 5%, 10%, next year down 15%, then up another 15%. That's not good for people's heart rate. For those of you who follow the channel, you have seen this chart before. So with all the cooling measures in place, right, the flux or the increase and decrease in the property market, and more so the decrease lah. Even if it does happen, you're not going to see that 15-20% like what we used to see pre-cooling measures, pre-2013, right? Because the Singapore property market today is very, very cash heavy, very low leveraged, right? And if prices were to drop significantly, the government can always turn back, and we have seen them do that before, turn back certain cooling measures to prop up demand. Yeah? Again, right, then now we want to understand price drop, okay? Because everybody is very easy to say, I want to wait for price to drop, I want to wait for price to drop. So how do you define price drop? I feel a lot of people see price drop as the property price index price drop, right? Quarter on quarter, if it comes down, yay, good. But does that translate into an actual price drop? Does that actually translate to you being able to get something cheap from the market? I'm just gonna make it very easy to understand. Today, so it just amuses me when people say that and say, I want to wait for prices to drop. Oh, great, right? My answer to them is, yeah, great. If the property price index the next month drop 5%, good, right? They say, yeah, good, then I will come into the market and buy because I want to buy when there's blood on the streets. Oh, okay. If the next month property price index drop 5%, can I come and buy your property for a discount? They will say, no. Yeah. So, just to put things into perspective, sometimes, when you see things from one perspective, you want to then put on the hat of the people on the other side, of the fence, yeah? Again, because we also know that the speculative demand is very, very low in the market today, standing at 2.6% speculative demand. So people are either owner-occupiers or they are investors, okay? If they are investors, right, they are invested for the long term, okay? They are not over-leveraged. They will not be forced to sell their properties. If interest rates go up for an extra $100 to $200, they are not, because when they buy that one, they already down pay 25% already, and they have taken their loan on already TDFR that has already formed a buffer for them. Not to say there will not be fire sales on and off, but it's so rare nowadays. Even the agents like ourselves cannot catch such deals. Right? If the deals happen like that, it likely will be snapped up by family members even before it comes out into the agent's network. And then if you are outside of the agent's network, you can only imagine how hard it would be to pick up something like that. So my advice really is then to learn how to then spot, instead of trying to go for that unicorn fire sale thing that may not happen. Learn how to analyze and pick up underappreciated, right, under the radar properties, which if you continue in this video, I'm going to share with you guys later on, right? But let's finish off on this slide. Okay, so you see, how does property price index work? Property price index is retrospective, right? It's always looking back at the past, which is why I can tell you in the next quarter, you're going to see the OCR property price index go up, okay, because of AMO and because of Lentor Modern. But is that really an indicator? Obviously, right, it's somewhat of an indicator, but that has no relation to actual expectations on the ground, which is why buyers, when they see price index drop, they expect everyone, right, to sort of adjust their prices, right? But sellers' expectations may be different, right? Which is why I have this sort of illustration. So the expectations on the of buyers is that blood on the street. So on the left side, right, they think it's the Great Singapore. It's going to be the Great Singapore Sale, yay, right? Go shopping in the market. But what's going to be the reality? Which is something that we have seen many, many times. We have seen that during circuit breaker, right, where with a lot of uncertainty in the market, what do sellers do? They adjust their price. If they really want to sell and need to sell, they adjust their price marginally, right? Was 2 million, maybe now 1.99 million, marginally, okay? If not, it will be the bottom right hand poster would be just take their properties out of the market and hold and wait. And if you follow us, you know all the data to show that the Singapore property market as a whole has extremely strong holding power. Okay, because you see, another good example, if an external shock were to hit the market, like what happened right 2 years ago with circuit breaker and whatnot, the government can hold pause on your mortgage payments. If they pause your mortgage payments for 1 year, nobody will have to force sell their house because you don't have to pay the mortgage, right? So you just kind of remember that situation lah. And remember, government's objective is not for prices to drop significantly, right? In times of already a lot of uncertainty, they try not to allow fear to take over the market, and especially your fundamental, most important, single biggest asset. Okay? Next up, let's take a look at some case studies and to put all these things into perspective. Okay, right, because I said, right, then what does it mean for you? And I want to I use two examples since today we are in the OCR. Two examples, right? Number one, Mandarin Gardens, and number two, High Park residences. And what will we look at? We will look at what happened in 08-09. Remember, we went through over here we went through over here 08-09, yeah? 4 consecutive quarters of decline, right? And declining 24.9%, yeah? And then also let's take a look at Q1 2020, right? Albeit the one only dropped for 1 quarter. Let's see what does it mean for you, right? So if we just look at like that, you'll be awesome. Q2 08 to Q1 09, excellent time to buy. Could you have gotten anything in Mandarin Gardens? Now let's jump to that. Okay, over here. Okay. The reason why I use Mandarin Gardens is because number one, it's old enough, it has plenty of data, we can go all the way back and see what happened in 08, and the prices have already somewhat stabilized over there already lah, and it's like easy look, just using Mandarin Gardens is big enough. It's like I don't really know what's the correct word for it lah. Like a small little case study of what's going to happen in the whole market. That word just hasn't come to me yet. When it comes to me, I'll let you all know. And then we look at High Park, which is a little bit more recent. Taking a while to load, but it has finally loaded. All right, let's come. Hopefully we can see the price trends coming up, and I want to see the. Let's let Mandarin Gardens log in. Okay, so let's take a look. Let's start off first, right, with High Park residences. Okay, so you see over here, what did we wanted to see? We wanted to see how many transactions happened. So High Park, right, it wasn't TOP yet in 08-09, but we can take a look at what happened between Q1 2020 to Q2 2020, right smack in the middle of circuit breaker and all those things. Could you, right, because it indicates that we were in a recession, we were in a period of property price index drop. Could you have gotten a fire sale, a good deal in that market? So we see all the way over here 2020, Q1 2020. So notice what happened. Did the average prices drop? Right, before that it was hovering at about 1,003, right? Hovering about 1,003. And then in that particular quarter, did it drop? It didn't drop, right? The transactions then became very, very sparse because you just have to look at the number of dots, right? If we average out the transactions over here, the polynomial trend line, if we can see this, right? You see, notice that how it was still going upwards, and even after the results come out, it was still trending upwards, right? So you don't see prices dropping significantly in the market, which was why I said people just in the end decide not to sell their house. If not, they do adjust their expectations a little bit. But most of it's only if they are investors, if they are owner-occupiers, a lot of the time they may choose not to do so lah. Unless, of course, the property they want to buy, the prices drop even more, and then they feel that, hey, maybe I drop just 10 to 20,000, I can jump over, but it's not like for a fire sale purpose. Okay, so if you're out there waiting for something like that to happen, please be realistic, because at the end of the day, the person that will be losing out is yourself. I will try to see all the data for this. The thing, right? Mandarin Gardens, the chart is a lot more clear, right? Because you notice all these lines, all these dots, because the development is so big, right? On average, we always see plenty of transactions, right? Look at how dense those dots are. But in the periods that we highlighted earlier, yeah, the periods of Q2 08 to Q1 09. Notice how, yes, right, prices did drop slightly, but notice how the dots became extremely sparse, meaning the transactions became few and far between. Again, if you then jump over to the start, Q1, Q2 of 08 of 2020, very, very sparse dots. But when the market comes up, then the dots become a lot more dense, right? It's a very clear indicator. When prices drop, when times are no good, when owners can't hit the price expectations, it's very easy to understand, because just put yourself in their shoes, right? This is your one and only asset. Maybe you use two assets. If the times are not good, what would you do, right? Most likely you will just hold the particular properties and not sell it. And across the board, you can pick up any of the other properties, and this is what you are going to see. Because again, nobody likes to sell their house at a price that they don't reasonably want to expect the prices, okay? So of course, once you zoom out in the long term, they tend to follow the property price index, but when they do drop, you also notice that a lot of the times the dots are become a lot more sparse. But is that truly a fire sale? Because these guys that then adjust it downwards, okay, they may have bought it at a long time ago, much cheaper price. But will you be happy because you got it cheap over here? Because you see, yes, if you were in December 07 and you have bought it, right, you may slap yourself, right? Because you say, hey, maybe in Feb 09 I would have gotten a better deal. First thing is, could you have bought anything at all? Second thing, you're not going to sell it that time anyway, right? You will hold it out and then the prices then came up. And in the long term, it still worked out well. It still worked out well for you, okay? Let's then move forward back to presentation slides over here. Move forward. So, what should you do? Okay? Number one, understand the difference between demand pause versus demand elimination, right? Because that will then translate into short-term price decrease versus long-term price decrease, right? If you really are concerned about long-term price decrease, then you will be thinking about, all the factors that I mentioned. Something like that happen, will that eliminate demand from the market? The only demand in the market left is investor demand. Yes, foreigner demand, but that only takes about 20% of the market. Next up is investment demand. The one that may be stripped out really would be investment demand, right? But we have seen, even with an increase in ABSD from 0 to 3 to 7 to 12 to 17, that demand is still there. Okay, because of course there's ways to move around it, which is why I say that demand will be slashed, will be eliminated significantly if of course decoupling is closed off, if capital gains tax is instituted. Yeah, okay, so right, I've answered point 1, point 2, understand the key differences and which one impacts you. Okay, so if you are looking for own stay, something a bit more long term, you know, should you be concerned about the short-term price drops? No, right? Would the government want the prices to drop over the long term? Also no, which is why would they do things to strip out demand, knowing that the market is has a really strong fundamental, which is why I've angled it and presented in this way to share from another angle. Because of course, if I tell you the price is not going to drop, everybody say, how would you know? Everybody say, of course, your agent, you'll say this kind of thing. I'm backing out with past things that have happened in the past, actual data, actual numbers. Okay, right. Next up, if it does drop, by how much? We have seen also the charts that yes, now within a band of plus minus 5%, it picks back up really quickly. Next one, is it worth the wait? If it does drop, a lot of the times the volumes evaporate as well. Nobody likes to sell their house for cheap. Will we see fire sales like the times we used to see it? The answer is no, because the market is today at a very drastically different, we have drastically different fundamentals, and there's very little speculative demand from the market. Of course, if you're a speculator, you have over leveraged, anything happen, right, you will sell the place for cheap, cut your losses and whatnot. But those days are the past, which is why we do not see those drastic fluxes anymore. Okay, any better alternative? Yes, right, which is why you are here today to see then how can we spot profitable transactions, what kind of characteristics do they hold, and personally, instead of trying to catch the fire sales, I rather guide you guys on how to find underappreciated, under the radar, profitable properties, so that you don't have to wait, right? You don't have to second guess and try to be a fortune teller and tell the future, right? Just make sure all those things are set, right? And you are more or less good.